Hello traders, welcome back to the channel. In today's episode, I'm going to be focusing on market structure. Market structure is the most important element of trading. If a trader doesn't understand where the market is heading or the direction of the market, they will never be able to become a good trader. It will also take them a long time to be profitable. So I just want to make sure that I save you time and money. I've also realized a lot of YouTubers who are posting about trading content, they make it very hard to understand and complicated. So I just want to make sure that I make it very easy, understandable. Either you are a complete beginner or advanced trader. So what we're going to be going over in this episode is how to recognize uptrend, downtrend, or when a pullback is valid. Second, we're going to be going over how to identify higher highs, higher lows, which is an uptrend market, or lower highs, lower lows, which is a downtrend market. We're also going to make sure that we go over how to use market structure as a swing trader, day trader, or even if you're a scalper. If you haven't subscribed yet, please go ahead and subscribe. Push the like button to help the YouTube algorithm, and push the notification bell so that when I post another video, you'll be able to see it right away. If you also have any question, please put it in the comment section. Without wasting your time, let's go jump in. So first thing first, as usual, I'm gonna try to show you guys on this whiteboard. So here we have uptrend market structure. So uptrend market structure is a price that's making a series of higher highs, higher lows. When you see price breaking structures and then giving you a higher low and then a higher high, breaking previous structure, and then a higher low, higher high, breaking previous structure, higher low, and then higher high. This is what you see in the textbook. This is the easy high, low, or higher high, higher low uptrend. But if you go to the real markets, it looks way different. It is very complex and it's hard to understand when you go to the real chart. So this is why I drew this here. Okay, so let's say the market is making higher highs, higher lows, and then higher highs. So this is the 4-hour time frame. Okay, let's say this 4-hour time frame is giving you higher highs, higher lows, and higher highs, and then here you have break of structure. So this part, this part here, you basically identified the price is giving you higher highs, higher lows. This means you're only going to be looking for a buy position when you go to the lower time frame. All right. So let's say once you identify higher highs, higher lows on the 4-hour time frame, somewhere on the 1 hour or the 15-minute time frame, now you have the pullback. So how do you know if this pullback is not going to continue going forward? Okay. How you're going to know is when you go to the lower time frame, you're going to have a mini higher high, higher low, higher high, and then you're going to get break of structure, which is a change of character. So this change of character is basically telling you that the pullback is valid and we are in a pullback, while we know the higher time frame is in an uptrend, because we recognize the higher time frame is in an uptrend. So we wait for the pullback. We can trade it as long as we know where the red zone is. So as long as we know where the original higher low is, which is right here. So if this higher low is invalidated or crossed over, this higher low will be basically become invalid. So as long as we are above this line, we are still in an uptrend market. So on the lower time frame, we can scalp this. As long as we have this, change of character, we can scalp this to the downside. Okay, as long as you know where we're heading. Okay, we can scalp it all the way down to the demand zone somewhere here. So once we do that, and then the price, comes to around this area, we know that now we are aligning with the original uptrend. So what we do is we wait for the lower high, lower low on the lower time frame, and then we wait for the break of structure or the change of character, okay, which invalidates the lower high that led to this lower low. So now we have a move that broke, the mini downtrend on the lower time frame. We wait for the pullback, and now we initiate our trade and target this higher high here. You can use this as a swing trader. Basically what you do is, if you're a swing trader, your higher time frame will be the weekly. So you go to the weekly time frame and you basically identify the direction of the market. Let's say you go to the weekly time frame, same thing, and then you identify that the market is giving you higher highs, higher lows, and higher highs. And then second, you go to the daily time frame, which is your confirmation time frame. You look for if the pullback started. So you wait for a mini higher low led to higher high, but you know your original direction of this market on the weekly time frame. If you're a swing trader, it's an uptrend market. As long as you're above this line, you'll be looking for a buy position. But on the lower time frame, since it's going to take a long time to wait for a trade to come over here, you can basically swing trade this. As long as you have this change of character on the daily time frame, you can go to the low time frame, like the 4-hour time frame, and then swing trade this. Swing trades, okay, all the way down to the demand zone. So once the price hits the demand zone on the 4-hour time frame, you know now that the price is aligning with the higher time frame, which is the weekly time frame. Okay, so now you wait for the change of character on the 4-hour time frame. You wait for the pullback to give you that confirmation, and then once the price comes back to a demand zone, you basically initiate your trade and target the previous weekly higher highs. Also, if you are let's say if you are a scalper, you basically go to the 1-hour time frame. Once you go to the 1-hour time frame, you identify higher high, higher low, higher high. So on the 1-hour time frame, you have price giving you a series of higher highs, higher lows. You go to the 15-minute time frame, you wait for a change of character to give you that this pullback that's about to happen is valid. So how do you know if the pullback is valid on the low time frame? It's going to give you a change of character, and then it's going to give you a pullback back to the supply zone. And as long as you are within this higher high and lower low, you are basically you basically take you scalp to the direction of the 1-hour demand zone, which is somewhere here. Okay, so I just showed you that you can use this as a swing trader, day trader, or even scalper. So now let's identify how a downtrend market looks like. So here we are in a downtrend, on a downtrend structure. So let's say when you read the textbooks, this is the type of structure that they show you, because this is what they show you on the textbook. But when you go to the real markets, it's harder than you think. Sorry, let me just go back to the chart again. When you go to the real markets, it's harder than you think. Okay, when you go to the real market, it's going to be harder than you think. So here, this is what you see on the textbook: lower highs, lower lows, just a simple one. Anybody can understand this one. I don't really care how old you are, you can always understand how this looks like, because it's a series of higher highs, lower highs, lower lows. But when you go to the real market, the story is different. When you go to the real market, this is almost what it looks like. Very complex, not easy to understand, but I'm gonna make it very easy. Okay, let's say you have a lower low, lower high, and then lower low, and what we have here is a break of structure to the downside. So this lower high that led to lower low, it gives you a break of a structure of this lower low. So basically, as long as you are within this line, you are in a downtrend market. So let's say you are a swing trader. You go to the weekly time frame, and then you basically identify the lower highs and the lower lows. You say lower high, lower low. Okay, so once you identify that, you know you are in a downtrend market overall. Okay, so now you go to the daily time frame, and you basically wait for a change of character. Okay, this change of character here, this is the entire move that broke this structure. But for you to identify the pullback is valid, you have to have this mini lower high led to lower low, and then you have to have a change of character or a move that broke the structure. So once you have this break of structure and you have this move, complete move, you wait for the pullback. And now when you wait for the pullback, you go to the lower time frame, like the 4-hour time frame, and you take the trade. You take the trade as a swing trade. You basically put your stop loss below here and target this weekly high here. All right, so that is how you swing trade this is strategy. Another thing is, how can you day trade this market structure strategy? So basically what we're doing is, if you are a day trader, your higher time frame will be the 4-hour time frame, your confirmation time frame will be the 1-hour time frame, and your entry time frame will be the 15 minutes or even lower. So let's say on the 4-hour time frame, if you're a day trader, you basically identify lower highs, lower lows, which is a downtrend market. So once you identify this structure here, lower highs, lower lows, you automatically know that you're only looking for a sell position. So what you do is you go to the 1-hour time frame and you wait for mini low high that led to lower low to give you that confirmation of we are in a pullback. And then you have change of character, and then you have a pullback here. Okay, once you get this pullback, you basically buy this market to target this this lower high. Okay, you target this low high and you put your stop loss below this structure here, this below this lower low. Okay, so once you do that, you ride this market until you realign with the overall 4-hour trend. So as long as you're in a between this lower high and this lower low, you know this is your red zone. So once you get to this lower high, you take the exit, and once you take that exit, and now you wait for the trade to give you another confirmation, which is to realign with the overall downtrend. Then what you do is you go to the low time frame again, like the 1 hour, like the 15 minutes. You wait for a change of character to tell you that we basically realigned with the original downtrend. Now you wait for a change of character. You wait for low high, high high, high low, high high, which is a short term. The price hits the supply zone. Now it gives you a change of character. You wait for this pullback. Now we basically are looking for a downtrend position. You take your trade, target this structure here. Okay? If you're a scalper, you do the same thing. It's not hard. If you're a scalper, you go to the 1 hour time frame. Go to the 1 hour time frame and then identify the direction of the 1 hour time frame. If you're a scalper, your higher time frame will be the 1 hour. Your confirmation time frame will be the 15 minutes, and your entry time frame will be lower than 50, like 5 minutes or even 3 minutes. Okay, you identify the direction of the market, lower highs, lower lows. You have a change of character here, and now you have a pullback. Okay, so now you have a pullback here that tells you that on now the pullback is valid because you have the change of character. We broke this mini lower high, lower low, and then we have a higher high that broke the structure. So now we wait for the pullback, and what's going on here is we're going to be scalping towards the supply zone here, because remember, on the 1 hour time frame we are still in a downtrend. So we have a lower high led to lower low, breaking this lower low structure here. So we know that our red zone will be around here, which is the higher time frame supply zone. So we're going to be scalping here, high low, take your trade, and then you target this structure here. So how do you know when to exit? How you know when to exit is once the price hits the 1 hour supply zone, you wait, you see this higher high, higher low, higher high, and now you have a change of character. We broke this, structure here, telling you that the pullback is over. So once you recognize the pullback is over, you basically exit. Once we break this structure here, you exit your scalp trade, and now you get ready to sell this market towards, according to the higher time frame. You sell it, target this demand zone. So this is how you scalp, using market structure. So already now we basically went over how to, use market structure to, as a swing trader, day trader, or even a scalper. Now let's go to the real chart and show you guys how it looks like on the real chart. Okay, I picked what do you call a DXY. You know what DXY is. DXY is the dollar, the index. Okay, this is what you measure the dollar. Okay, like basically if you trade Euro USD, Gold USD, GBP USD, AUD USD, it's always good to know where the dollar is heading. So if the dollar is strong and you're trading GBP USD, you'll be basically selling GBP USD. If the dollar is weak, you'll be basically buying GBP USD. So we're going to use the dollar index. I'm going to try to make another video to explain the index maybe another time. So now let's just focus our main objective. So here we have the price creating structures, giving us break-up structure here, giving us higher low, higher high, breaking this structure here, and then we have a higher low, breaking another structure here, and then giving us another higher high. Okay, higher low led to higher high. Now we have another higher low and break of another structure. Okay, so once we have this another break of a structure, okay, we have a higher low led to another higher high, broke the structure. Okay, now we have another higher low led to higher high. Okay, I mean higher low led to higher high, sorry, and then giving us this mini higher low. So this is gonna be your last higher low led to higher high. So as long as you're above this line, you're just looking for a buy position. Okay, so now what you do is you have a pullback that started. Okay, so this pullback is already valid. And how do we know if the pullback is valid? Let me show it to you real quick. Let me cut this. So how do you know if this pullback is basically valid? Let me just cut it real quick. Okay, once I cut this price, we have a higher low led to higher high, and now we have price going to the down direction. So let me just show you guys this pullback is valid. That is not going to continue to the upside, and it's going to come over to basically realign with the low, with the higher time frame. So here we go a little bit lower. Okay, so how do we know the pullback is valid? We have a higher low, mini higher low here led to higher high, and what we have after that, we have a change of character. Okay, we have price coming down, taking out this low that led to this this higher low that led to this higher high is taken out. So now we have price coming down, pulling back. So now we know we are in a the pullback is valid because we are in the pullback heading towards the overall heading towards the demand zone. So now we can basically trade this. Wait for the pullback, trade it until you get to this zone here. So once you get to this area here, you take your profit and you walk away. As long as we are within this higher low and higher high, we are still on a basically uptrend market. Okay, well, now we have a change of character. Remember, this was our higher low led to the higher high, and now the price came all the way down, closed below this higher low. So what we know is now the market is basically turning into a downtrend. We have a change of character. Once we have this change of character, we're in a downtrend market now. Okay, change of character. Now the price reversed, test around this area. I'm going to explain this some other day, but today we're just going to focus on market structure. So now we're only looking for a downtrend position now, because the price, took out the lows here and it started making lower highs, lower lows. So now we have the price giving us lower highs, lower lows, breaking the structures, lower high led to lower low, and broke this structure here. So what we got? Now we are in a downtrend market. Okay, let's say if you're day trading, you go to the 4-hour time frame, and then you identify that the price is giving you a series of lower highs, lower lows, breaking the structures to the downside. Each low is basically lower than the previous low, and each high is lower than the previous high. So this tells you that we are in a downtrend market. So when you go to the lower time frame, like the 1 hour and the 15 minutes for your entry, you only look for a down position. You can also use this as a scalping. Okay, if you want to scalp on the lower time frame, like the using the 1 hour time frame to identify your direction, and then go to the 15-minute time frame for entries to scalp, you basically take advantage of this short-term buys until you realign with the higher time frame structure. Okay, so once you realign with the higher time frame structure, now you basically hit the right direction of the overall market. So let's say price give you another lower low, lower high led to lower low, break this structure, and now we have another lower high led to lower low, breaking this structure here. Okay, we're still in a downtrend market. We're still in a downtrend market. Now we have another lower high. We have another lower high led to lower low, breaking this structure here. Okay, still we are in a downtrend. We have another lower high breaking this structure here. Okay, so you can see we are still in a downtrend market. This is basically the recent data. So we have another lower high led to lower low, breaking this structure here. Now we have another lower high, which is lower than this low here, breaking this entire structure and giving us lower lows. Okay, lower lows. You can see the price is basically making series of lower highs, lower lows. So the whole point is, it is very crucial that you identify the direction of the market. When the market is giving you a series of lower highs, lower lows, lower high, lower low, 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 you're basically looking for a downtrend position. Okay, when the price is giving you higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, like here, price is giving you higher high, higher low, higher high, higher low. So each high is higher than the previous highs, and then higher high, higher low. Okay, each higher low is higher than the previous higher lows, and then you have a higher high led to higher low. Okay, and then you have a mini higher high, higher low, and then higher high. So what we get here is a change of character. Once the price breaks this demand zone or higher low, now you are waiting for the pullback towards your point of interest area, and then you initiate the trade targeting these lows. Okay, because remember, This is what the market does, targeting these lows, okay? And when you are in a downtrend market, let me just emphasize it again. It's lower highs, lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, lower lows. Each low is basically lower than the previous low. You can see it's lower than the previous low. This is lower than the previous low, and this the lower low is basically lower than the previous low. Lower than the previous low. This one is lower than the previous low. This one is lower than the previous low, and this one is lower than the previous low. So this tells you that clearly you are in a downtrend market. And I'm gonna try to make a video about our next video will be how to use the index, which is this one here, how to use the dollar index to measure, you know, other currencies. Basically, if you're trading GBP USD, Euro USD, AUD USD, Gold USD, it's good to know how the dollar index works. So therefore, if the dollar index is basically telling you the price is downtrend, that means the dollar is weak. If the dollar index is giving you that the price is going up, giving you higher highs, higher lows, this tells you that the dollar is strong. So until we meet on another video, please go ahead and subscribe. If you have any suggestion or any questions, go ahead and put it in the comment section. Also, I want to tell you guys, there are people in the comment section who are asking for money. Please do not give your money to nobody. I'm not selling anything right now. Make sure you don't get scammed. I'm really grateful for your time. I hope you learned a lot of value information from this video. If you did, smash the like button. Until next time, ciao.